Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're also going to be talking about this idea that I see pervasive across the entire cryptocurrency community. The idea that for the Bitcoin bear market to end and for a new Bitcoin bull market to ensue, that Bitcoin must go through a new capitulation phase and shake out the weak hands, and then finally a new Bitcoin bull market will dawn and a new Bitcoin bull market will come and we'll all get filthy, stinking rich again like we did at the end of 2017. Well guys, in this video I'm going to be debunking that because I really don't think it makes any sense that Bitcoin needs to go through a new capitulation phase. Let's just think about it here. For Bitcoin to go through the capitulation that people say, what do we have to do? What do they say we have to do? A lot of people say that we need to break through $6,000 and then head down to $3,000, $5,000, $4,000 some dollars somewhere around here. We need to see Bitcoin come down here, set a newer low, and break the most important level of support in all of Bitcoin technical analysis. I don't know about you guys, but I don't really see how that would start a new Bitcoin bull market, and we're going to be discussing that in today's video. So without much further ado, let's go ahead and get right into it. The first thing that I want to go over is where this idea of capitulation came from, and really I think it comes from two major points. The first place that I'm pretty sure it comes from is this chart right here. If you guys have been in the cryptocurrency space for a while, you'll probably have seen this chart at some point. You have the smart money coming in during the stealth phase, and then during the awareness phase, this may be being the first half of 2017, you see some institutional investors jump in, and then you see the mania phase, the public phase, and then the market goes parabolic, which is exactly what we saw happen here in 2017. And for the bull market side of this, I really do think this makes a lot of sense. And we do see a takeoff, we do see a first sell-off, bear trap, we may see a second sell-off or a third one. We see media attention, enthusiasm, greed, delusion, new paradigm, etc. I like seeing this, and this chart does make a lot of sense. But this word right over here, capitulation, is I think where about half of this idea of a capitulation phase comes from. And really, I think it's completely misguided to base your entire philosophy of technical analysis off of one chart that some dude made. Now, I'm not going to say Dr. Jean-Paul Rodriguez down here doesn't know what he's talking about, but I am going to say that markets are a little bit more complicated than just plotting a chart onto another chart, guys. It's not that simple. All markets are different. You can't just say, well, okay, well, Bitcoin hasn't gone through capitulation phase yet because it hasn't dropped like, what, 70% like it looks like it does in this chart. So therefore, Bitcoin can't start a new Bitcoin bull market because this chart says so. That really just doesn't make a lot of sense to me. And the second place where I see this coming from is the Bitcoin bear market that followed or that came prior to the one that we're looking at now. Because what I've talked about before is that $300 down here in the 2014-15 bear market back over here was analogous and is analogous to $6,000 on Bitcoin right now. But if you look at this market, what Bitcoin eventually did is it broke below $300 and we went down to about half of that, which half of $6,000 would be around $3,000, which I think is where this idea of a capitulation phase also comes from. I think a lot of people are looking at this and saying, okay, well, if Bitcoin's going to repeat market history, then we'll see Bitcoin break levels of support, a key level of support, and then lose half its valuation. I think these two places are where most of this idea of a capitulation phase comes from, and I think both of them are completely and utterly misguided. So that's what we're going to be discussing in today's video. The first thing that I want to talk about is the market itself and kind of the history of this. Because, guys, I've been doing YouTube since November 16th, 2017. I was back over here, right there on this candlestick right over here. This is when the YouTube channel began. This is when the first video titled "Is Bitcoin Overextended?" If you'll believe it, the first Bitcoin well, that was the first video that went up on this channel. I talked about how we didn't have enough deep enough pullback, and I think Bitcoin was overextended and that we might see some new bearish price action coming. Turns out I was very, very right, but we saw Bitcoin run up here in this delusion and greed new paradigm side, and then we saw Bitcoin fall off. And that makes complete sense. But right around the time that we saw Bitcoin come down to $6,000 and then bounce back up here to around $12,000, I started seeing comments of people saying, okay, well, Bitcoin's going to enter a new bull market. It's okay. Everything's fine. We just need to capitulate. We just need Bitcoin to crash like 70%, and then a new Bitcoin bull market can start. Well, like I said at the beginning of the video, how does that really make any sense? When you say that Bitcoin needs to go through the most important level of support of $6,000, break below that, that's for some reason going to start a new Bitcoin bull market? I just don't understand. I understand the idea that, well, if it goes really, really low, then it's easier to set a new higher high in motion. I completely agree with that, but we don't really need to go that far higher to set a new higher high in motion. But anyway, back to the history. For a long time, I've been seeing people say this, and people would say, we just need one more downtrend to flush out the weak hands, and then a new Bitcoin bull market can start. They would say that. One more downtrend, shake out the weak hands, new Bitcoin bull market. Downtrend, shook out some weak hands. Okay, well, we need another one. Downtrend, shook out some weak hands. Oh, well, that doesn't count. We need another one. Downtrend, shook out some weak hands. Okay, that doesn't really count, yeah. That doesn't count. Downtrend, that shakes out some weak hands. Well, I'll be quite honest with you guys. It seems like Bitcoin trading sideways has shaken out more weak hands than Bitcoin going down has shaken out weak hands when I'm looking at the analytics on this channel. But also, every time there's a new downtrend, someone just says, okay, well, This is the time. Now we're going to have this downtrend, and then we're going to see a new Bitcoin bull market start, because this time we're going to shake out the weak hands and everything's going to be peachy keen. Well, I agree that a Bitcoin bull market is coming, but it's not that simple, guys. Just saying that we need one more downtrend isn't it doesn't work that way. That's not the only thing that you need to see happen. So I've seen this come for a long time. I've seen a lot of people say this for a long time. And like I said, it doesn't really make any sense for Bitcoin to break the most important level of support in all of Bitcoin technical analysis to start a new Bitcoin bull market. But let's also talk about the history back over here with the 2014 bear market and why Bitcoin broke this down here and broke the analogous level of $6,000 of around $300 back over here. Because like I've said in many videos, I've talked about this in the past, and it's obviously very clear if you look at the market. If Bitcoin were to completely follow this market in the exact same way that it did back over here, then yeah, Bitcoin would break $6,000. But there's a couple reasons I don't think that's going to happen, and why that just, one, it doesn't make any sense that will start a new Bitcoin bull market, and two, why I really, like I said, I just don't think it's going to happen. One of the things that you have to look at, and one of the things you have to remember when you're doing technical analysis, are the principles of technical analysis and some of the core ideas in technical analysis. And one of the core ideas of technical analysis is that the more times you test a level of support or resistance, the more likely you are to break it. Now, I know what you're going to say. You're going to say, well, Bitcoin's tested $6,000 like 7 times this year. I'm getting to that. But what we saw back over here at the end of 2014 is that Bitcoin was continually testing and trading around the level of support down here. We saw Bitcoin pull down once, twice, 3 times, 4 times, and then we broke it. We saw Bitcoin testing it a lot. And because Bitcoin was doing the majority of its trading above this level of support and not on the downtrend of resistance, Bitcoin had a much higher chance of breaking the level of support and continuing lower. Now let's compare that to the bear market this year in 2018. What do we see over here? Well, Bitcoin hasn't come down to $6,000 in a very long time, actually. The last time Bitcoin was down here at $6,000 was in August. We did see Bitcoin go down here a couple times, and if I was to be honest, the most bearish time the time where I was the most bearish and the Bitcoin market looked the most bearish were these two pullbacks right over here. These were bad times. Right now, I think it's different, because what do you see if you look at the market? Bitcoin isn't testing $6,000. It's not trading around $6,000, but I'll tell you where it is trading around. It's trading around the downtrend of resistance in the last couple of weeks. And what did I just say? A lot of times when you see a market trade around a level of support or resistance, the longer it does it for, the more likely it is that it is to break that level of support or resistance. So right now, we're trading around the downtrend of resistance. Very obvious, especially if you look at the Coinbase chart, which is much more accurate. We're trading around the downtrend of resistance, meaning that we're more likely to break it than we are likely to break the level of support, as opposed to the Bitcoin bear market in 2014, where Bitcoin was trading around the level of support. So those are the differences there. That's not the only difference, though. One thing you have to remember in the 2014 Bitcoin bear market, I think I talked about this literally in yesterday's video, is that there was a very big news story, and you might see me typing it, that kind of colored the Bitcoin bear market here in 2014, and it was called Mt. Gox. As you can see, Mt. Gox turned into a waterfall of blood after it got hacked and brought the market down with it in a major, spectacular way. More than half of the trading on Bitcoin, I believe it was close to 80% of Bitcoin trading volume, was going through Mt. Gox, and Mt. Gox got hacked, guys. It was a very, very big deal, and it really did set the Bitcoin bear market in motion. It didn't set it in motion, but it definitely exasperated the actual Bitcoin bear market that was already going on. We don't have a major bearish catalyst like we do here in 2018, or like we did in 2014 here for 2018. In fact, I'd say quite the opposite. We see a lot of bullish sentiment coming into the market. We see a lot of bullish fundamentals coming into the market, which really shows itself in the way that Bitcoin is trading here at the end of this bear market's long-term descending triangle pattern. Because we're in a descending triangle pattern here now, and we were in 2014, but we're trading in it in a different manner. Back over here, we were trading around the level of support. Now we're trading around the level of resistance. Back over here, we had bearish fundamentals. Over here, we have bullish fundamentals. Guys, like I've said, just because you see a chart say something that can't, this chart I don't think was even made for Bitcoin. It was made for emerging markets. Bitcoin is one of them, but it wasn't specially crafted for Bitcoin. And even if it was, why does that chart have any more why does that chart have any more ability to predict the future than actual bona fide, tried and true technical analysis that's been developed over the last 100 years? I really just don't understand why this chart would say that, and also why one data point back over here in 2014 overrides all of the bullish technicals and fundamentals that we're looking at here right now. And another thing you guys have to realize is that 2014 back over here, the Bitcoin and the cryptocurrency space was very, very underdeveloped. It was a much, much, much more immature market than it is now. Bitcoin and cryptocurrencies are, by no stretch of the imagination, or by every stretch of the imagination, I should say, an emerging market. They're a very young market. Bitcoin is worth $100 billion right now, guys. That's going to have a couple more zeros added to it in the next decade. But my point is that Bitcoin is a very young market, and that's going to change. But for right now, it's growing, and it's growing in a very big way. Bitcoin, the cryptocurrency space, and especially the blockchain industry is growing very, very quickly. Let me give you an example of that, guys. You guys know that the Cryptocurrency Technical Analysis Academy, linked in the description, launched on the 23rd of September. And the course has done very, very well. We've sold dozens of copies. And the way that I receive my payments for the Cryptocurrency Technical Analysis Academy, most of them go through PayPal. So let me go ahead and talk about PayPal, because PayPal is basically an online bank. That's how PayPal operates. I was withdrawing some of the earnings from the Cryptocurrency Technical Analysis Academy. I submitted a withdrawal from my PayPal into my bank account on Monday. Today is Thursday, and I kid you not, about 5 minutes before I sat down to record this video, they finished reviewing my transaction so that my bank can start reviewing the transaction so that I can have my earnings. So it'll end up taking 5 days, and if my bank doesn't get to it this week, it might be Monday. It might end up being 7 days to move that money from the Cryptocurrency Technical Analysis Academy. Whenever I receive Bitcoin payments from the Cryptocurrency Technical Analysis Academy, because you can buy and you can pay me in Bitcoin, it takes about 5 or 10 minutes because the Exodus wallet will scan the blockchain and it will see that the transaction has gone through, and people pay literally 1 cent to send Bitcoin as a transaction fee right now, guys. Let that sink in for a second. It takes 3 days for PayPal to review that transaction, and then my bank another day or so to review the transaction and deposit the money, etc., etc., etc. The traditional banking system is broken, it's slow, and it's expensive. Bitcoin and the cryptocurrency space are not. They are far quicker. Bitcoin, which is how all of the CT2A payments have been received thus far, the slowest cryptocurrency, one of the worst cryptocurrencies as far as it relates to fees and block times, is almost it's much faster than traditional banking standards by literally orders of magnitude. It takes 5 days to send a transaction through PayPal and the banking system that takes literally 5 minutes to send through Bitcoin. Guys, not only are the fundamentals doing really, really well for the cryptocurrency space, even much better than they were in 2014, the technicals are looking very good, and really, I don't see any reason why we need a capitulation phase, guys. It all goes back to that core thing that I talked about at the beginning of the video. Just think about it to yourself. Why would Bitcoin breaking $6,000 and coming all the way down to $3,000 kick off a new Bitcoin bull market? It doesn't make any sense to me, guys. Like I said, I understand the argument that Bitcoin breaking $6,000 and going down to $3,000 shakes out the weak hands, but let's go ahead and wrap the video up with this. I think all the weak hands are already gone. If you're still in this cryptocurrency market, if you're still here, not one, you have balls of steel because you've sat through it's just not been that pleasant this year. Not only do you have really massive cojones, not only that, you're not going anywhere. The people that are still here, they've been through it all. You guys have lost your dip virginity. You lost it really early on in the year. Bitcoin is not going anywhere, and neither are you. If you're here, I'm sorry to break it to you, but you're kind of stuck with us at this point. You're not going to be getting out of this anytime soon, and I don't think many people in the cryptocurrency space that are still here are. If we were going to see one more capitulation candle, to be totally honest, the vast majority of people that are still in the cryptocurrency space would probably welcome it. I don't see Bitcoin going down to $3,000, getting rid of that many more people, because if you sat through all of this, you could sit through that, and you'd be the one down there buying, because if you're still in this space, you're one of the people that are the smart investors in this market cycle, because I think we've already gone through this. We've already gone through the despair phase, and I really think we're right over here. I don't think we're right over here if we're going to use this chart. And to wrap up, let's use this capitulation phase here, and while we're talking about people, the capitulation phase and shaking out the weak hands, I'll tell you what, I think we've already gone through the capitulation phase. I think this area right over here was the capitulation phase. Really, I think it was, because what we saw here, we saw a bull trap. I honestly thought I got bull trapped into this a little bit because Bitcoin pulled back 50%. I think this was the bull trap. You might also argue that this was the bull trap, but I would very much argue that if we're going to use this capitulation phase idea, that was the capitulation phase where Bitcoin was trying to make new rallies, trying to set new higher highs, and just couldn't do it. And every time it tried, it set a new lower high, and everybody got scared and left the market. I think everybody who was going to leave the market has already left, and we've got nothing but upside to come. And I do think a new Bitcoin bull market is going to be starting in the next 6 months, and I do think it is going to be absolutely glorious, and it's going to dwarf anything we've ever seen in the history of Bitcoin and the cryptocurrency community. And if you are still here, you're not going anywhere, and you should be happy about that. Anyway, guys, tell me in the comments section down below what you think about that technical analysis. Do you think Bitcoin is going to go to the moon in the next 2 years? Do you think Bitcoin is going to need a capitulation and come down to $3,000, $4,000 to start a new Bitcoin bull market? Have I misrepresented the argument? Tell me all of that in the comments section down below. I love reading your comments. Also, If you want to come talk to me in person, you can definitely consider joining the Discord server with the link in the description down below. And also, if you guys want to learn how I do my technical analysis, click the link down below to look at what we have to offer in the Cryptocurrency Technical Analysis Academy. I'm very, very pleased with that product. And in the next couple of days, we're going to be uploading a couple more videos to the course. So if you guys are happy about that, then definitely consider dropping a like and hitting that subscribe button. Shameless self-promotion. Anyway, guys, that's going to do it for this video. I do want to thank each and every single one of you for watching as always. And I will see you guys in the next video. Peace.